Happy TGIF and welcome everyone to No One Daily Bitcoin Pod. In today's show, I'll be breaking down the latest Bitcoin technical analysis. We'll also be discussing Spar Supermarket in Switzerland starts accepting Bitcoin payments. Let's go. As well as Arizona Crypto Reserve Bill passes the House Committee heading to the third reading, as well as quantum computers likely to reveal if Satoshi Nakamoto is still alive, according to Bitcoin OG. Adam Back. Also, Saylor says ETF investors' stronger hands are helping to stabilize the Bitcoin. He also shares with us 21 truths of Bitcoin, which I'll be revealing for you in today's show, as well as will the United States dump gold for Bitcoin, a real geoeconomic shift in real time? I think most likely, and I'll be breaking down the most likely reasons for them to do this. We'll also be taking a look at the overall crypto market, all this, plus so much more in today's show. But without further ado, if you're new to the channel, important to smash the likes. Go ahead and subscribe. It's free to do so. We're the #1 day of the Bitcoin Pod. Then ring that bell. Turn on all the notifications. That way you get notified each and every day when I go live. Today is pod number 1966. I'm your host, JV. It's April 18th, 2025. Happy TGIF. A great day to be alive, and happy Good Friday, first and foremost. Let's kick it off with our market watch this Good Friday, shall we? And as you can see on your screen, pretty little bitty correcting, only down 1% on the day, maintaining above 84,500. At the time of the live stream, Ether back in the 1,500 range, unfortunately. XRP, BNB, Solana, and Tron also in the red and correcting as well. And check it out. CoinMarketCap.com. The current crypto market cap sits at $2.67 trillion, and the Bitcoin market cap is at $1.6 trillion, roughly $1 trillion difference between the two. 46 billion worth of volume for the past 24 hours, with Bitcoin dominance coming in today at 62.9%, the apex predator, as the Ether dominance is all the way down to a minuscule 7.2%. And checking out top 100 crypto gainers past 24 hours, we got Tau leading the pack, up 10%, followed by Flare up 9%, followed by Immutable up 5.5%, followed by the Sandbox. Which alt, if any, are you bullish on for the bull? Holla at your boy. And checking out the crypto bubbles. I like to get the visual perspective on the day. Safe to say, let's get an update. Here we go. Updated. Okay. So I'd say majority of the alts are actually in the green today, but the top ones are correcting and in the red, as ironic as that is. Fartcoin down 10% on the day. Zooming out on the weekly, I'd say 60-40 red over green. On being the biggest loser. You understand that was rug pulled. Lost like $5 billion of market cap overnight, unfortunately. And checking out the crypto greed and fear index. Today we're 33 fear. Yesterday at 30. Last week at 25 extreme fear, and last month at 32 fear. Silver lining: the lower this number goes in extreme fear, the more likely of a pumpy pump. So let's pump it up. And checking out the infamous time chain calendar. We're currently on block number 892,990, and we have 157,000 blocks into the next halving, and you can currently exchange one fiat monopoly dollar for 1,183 sats. So pick up the sats, put down the gats, and pick up some Bitcoin caps from my man Sergio over at bitcoincaps.net. And if you don't know, now you know, Joey. Let's get it. Let's kick it off. Now that we did our market watch, we'll do a little TA, a little astrology for the broskies. Headline here reads, Bitcoin price volatility imminent as speculators move 170,000 of the biddy. This is according to the latest TA from Crypto Quants. Let's break this down. Then I'll pull up some of the live charts. Bitcoin short-term hodlers are signaling that the current calm Bitcoin price behavior may not last long. Crypto Quant revealed that 170,000 BTC owned by entities with a purchase date between 3 to 6 months ago begun to circulate. Quoting them here, around 170,000 biddies are moving from the 3 to 6 month hodler cohort. Large movements from this group often signal that significant volatility is imminent, and the chart, as pulled up right here, shows the impact of the previous short-term hodler events, with the latest being the largest by volume since late 2021. Price direction varies both upwards and downwards, making market responses visible. Volatility is a-coming, and short-term hodler entities are notoriously sensitive to snap market moves and transitive narratives. That's why I got to be in the cohort of the long-term hodlers. Don't be so sensitive, Karen. And recent Bitcoin price downside has been met with episodes of the panic selling by the cohort, which is defined defined as an entity buying up to 6 months previously. Earlier in the week, CryptoQuant listed the short-term hodlers as one of the main sources of the current Bitcoin selling pressure. Not a good look, short-term folk. Short-term hodlers have been the primary sellers, sending an average of 930 Bitcoin a day to the exchanges. Weak hands get wrecked. I mean, it is what it is. In contrast, long-term hodlers only moved about 529 Bitcoin daily, highlighting the short-term fear or profit-taking, while long-term conviction remains intact. Meanwhile, Crazy Block described the classic shakeout as occurring in Bitcoin, while allying concerns over a uniform rush of exit across the investor spectrum, as he shares here. With Bitcoin trading sideways and volatility compressing, this cohort-driven breakdown helps us understand that the current correction is not a mass exodus by the smart money. It's more likely a reaction from the nervous, short-term, mid-tier, cabbage hand hodlers. So please don't be like cabbage hands Portnoy over here and hold the Bitcoin for the long term. You got to have the diamond hands. You got to hodl at least a minimum, I would say, of 4 to 8 years to expect significant gains. And in fact, every single Bitcoin hodler, from my understanding, that has been hodling for at least 4 years is in the black, meaning with it at least an unrealized gain. And that's where you want to be. Never sell at an unrealized loss, because then you're turning an unrealized loss to the real McCoy, a real loss. And that's not a good look, and that's something the short-term hodlers are apparently notorious for. But with all that being shared, I promised to pull up some of the live chart. We'll do some live chart action, Jackson satisfaction here on TGIF. And yeah, you're looking at the hour chart right here via Coinbase, via TradingView. This is live and in the flesh. Not a lot of movement really going on right now. It's been trading sideways for the day, but we do have a target sitting at 88,000. Zoom in, bear target sitting just shy of 78.6. Zooming out from there, we'll take a look at a 4-hour chart. Says it's going on forever, JB. We do have, we did have a dip, but we have recovered, and we're currently again flatline at 84.5. Bear scenario in play of 73.5 on the 4-hour. No bull scenario printed currently. And zooming out a little further for the daily, we do have the rising wedge followed by the falling wedge. It's like a yo-yo. Let's see if we slinky back to the rising wedgie formation. We do have the bull trend scenario sitting just shy of 112,000, taking us back to price discovery. Currently sitting at 109.3, the current all-time high achieved in January, back on inauguration day. We do have a bear scenario just shy of 69 G's, baby. And then there's a super bear sitting at 49,000. And zooming out a little further from there, we'll take a look at a weekly. Then we'll check out the monthly real quick. The weekly chart shows a cup and handle target, as you can see on your screen. Last week, we finally had a green candle close. And this week, thus far, if things continue where they're at least, we'll get another green weekly close. We have till Sunday to go, but we'll see. I mean, again, not lots really happening right now. Unfortunately, it's been pretty boring, but it is what it is. And zoom out a little further, we look at the monthly, and the monthly also shows past couple of months have been bearish, unfortunately, but hopefully we can maintain in the green for the month of April. Now we're in the second quarter of 2025. It's the year preceding the halving. So you already know, typically it's a very, very bullish year, and hopefully we ain't seen none yet. Here's the latest big news coming out of Switzerland. Spar Supermarket in Switzerland starts accepting Bitcoin payments. How many of you have ever been to Switzerland? Let me know. I visited there for a few days on my Euro trip. Beautiful scene. The mountains were very majestic. It was freezing when we were there, but nonetheless, I just remember going on the train and witnessing all the epic views of the mountains and such. It was a good look. Global grocery giant Spar has rolled out Bitcoin-based payments in Swiss City, marking another step in the growing adoption of the crypto for everyday transactions. Now, the Spar supermarkets in Zug, Switzerland, implemented the Bitcoin payments via the Lightning Network. The store's Bitcoin payments went live on Bitcoin Now, a community-driven project highlighting stores that accept Bitty payments. DFX Swiss, a crypto to fiat payment solution firm, announced just recently this Spar location is among the first supermarkets in Switzerland where you can pay directly at the checkout using Bitcoin via the Lightning Network, thanks to our new hashtag Open Crypto Pay solution, an open peer-to-peer standard for in-person crypto payments. I think that's fantastic. So if you want to live off of Bitcoin, you can do that, as groceries is an everyday expense, obviously, and most grocery stores do not accept payments. So that's a step in the right direction. Bring it. Switzerland has long been regarded as one of the more crypto-friendly European jurisdictions with some of the earliest crypto adoption initiatives. Back in 2023, the Swiss city of Lugano adopted Bitcoin and Tether USDT payments for all municipal fees, one of the world's first city administrations to do so. There are currently 1,013 stores and businesses accepting Bitcoin payments just in Switzerland, according to the Bitcoin map data outlined right here in your screen, and good coverage all across Switzerland. That's what's up. Bitcoin adoption amongst the retail giants with a global presence may increase mainstream trust in crypto payments. SPAR operates over 13,900 stores across 48 countries with over almost 15 million daily shoppers and 450,000 employees worldwide. Now, friction points and complicated user experience are often criticized as some of the biggest hurdles limiting the mainstream blockchain adoption. However, SPAR's Bitcoin implementation enables easy payments just by scanning a quick response QR code, making it easy peasy. That's how I paid for my pupusas in Bitcoin country. You know what I mean? So game on. It was super simple, by the way. You just pull it out, scan it, bada boom, I bought a Bitcoin. Just scan the static QR code, send the sats, immediately an easy registration by the cashier. And if enough people use it, it may be rolled out in the entire freaking country. So hopefully people who use it support the biddy. Quoting a user here, I use the Phoenix wallet for the Lightning Network, but pretty much anything works. That means you can use Strike Network, Lightning Wallet. You can use currently, what's the one? There's Exodus. There's Shivo over in El Salvador. I don't recommend that one, but I digress. There's a lot of options out there. And increasingly more companies are adopting crypto in the country. Switzerland-based blockchain ecosystem, Crypto Valley, surpassed almost 600 billion in valuation last year after a 55% yearly increase. That's pretty significant, worth $600 billion. And amongst the 50 regional entities, 17 have reached unicorn status. And here I thought unicorn was a fictional beast. No, unicorn status is being achieved. $1 billion valuations on the companies. Quoting them here, a Swiss industry with a top 50 entity share a valuation of 593 billion and whose funding medians exceed global medians reflects vision and resilience. And if you don't know, now you know. Some of the Crypto Valley's well-known projects include Layer 1 blockchain network, Ethereum, Cardano, and Casper blockchain. I guess Casper's the friendly ghost. I didn't realize. But anyways, there you have it. Broskies. Hopefully they start adopting some retail biddy lightning payments in the United States as well. Follow in Switzerland's footsteps. Why not here? Here's the latest with the Arizona bill. Good news. Arizona Crypto Reserve Bill passes the House committee, and it now heads to the third reading. Lucky number 3. That's right. One of Arizona's crypto reserve bills have been passed by the House and is now one successful vote away from heading to the governor's desk for the official approval. And this is the Arizona Strategic Digital Asset Reserve Bill, SB 1373, which was approved officially yesterday, April 17th, by the House Committee of a Whole, which involves 60 House members. Shout out to the House members weighing in on the bill before a third and final reading and a full floor vote. So this is pretty massive, as you can see here from the Bitcoin laws. Arizona update, Bitcoin Reserve Bill SB 1373 has been passed by the House Committee of the Whole. The next step is the third reading of the final vote. And you can see trailing behind Arizona, of course, we have New Hampshire, we have Texas, Alabama, we got Florida, we got Georgia. I get my peaches out in Georgia. Ooh, that's it. I like my from California. Ooh, that's, yeah. SB 1373 seeks to establish a digital asset strategic reserve fund made up by the digital assets seized through the criminal proceedings to be managed by the state treasurer. Arizona's treasurer would be permitted to invest up to 10% of the fund's total monies in any fiscal year in digital assets. The pre-low biddy is going up forever, Laura. The treasurer would also be able to loan the fund's assets in order to increase returns, provided it doesn't increase financial risks. However, the Senate approved SB 1373 may be a setback by the Arizona Governor Katie Hobbs, who recently pledged to veto all the bills until the legislature passes a bill for disability funding. Boo, Katie. Hobbs also has a history of vetoing bills before the House and has vetoed 15 bills sent to her desk this week alone. I say we fire Katie Hobbs. How do you like those apples, Katie? Now, Bitcoin Laws founder and Apollo CEO Julian Farrer told Cointelegraph he expects SB 1373 will pass the House, though it may merged with another crypto-related bill, such as the SB 1062, which aims to expand the definition of legal tender and to include the cryptocurrency. Arizona is the new leader for the state Bitcoin reserve race. Where you at, Arizona? Let's go. SB 1373 has been passing through Arizona's legislative alongside Arizona's Strategic Bitcoin Reserve Act, SB 1025, which only includes the pretty little bitty. The bill proposes allowing Arizona's Treasury and the state retirement system to invest up to 10% of the available funds into the bitty. SB 1025 also passed the Arizona House Committee as a whole April 1st and is awaiting a full floor vote. Send it, baby. Also, we have Utah passing a bill legislation on March 7th, scrapping the cornerstone provision establishing the Bitty Reserve in the final reading. The Texas Senate passed a Bitcoin Reserve bill also on March 6th, while a similar bill recently passed through New Hampshire's House. Give it up for the New Hamsters. While Arizona has seen most of the progress, Farrer believes that the Texas bill is the best shot. So you're telling me there's a chance at being signed into law, noting it has seen the fewest explicit roadblocks thus far. And if you don't know, now you know. State adoption coming to a state near you. Here's the latest from Mr. OG himself, Adam Back, who many still believe is Satoshi, by the way. He says quantum computers are likely to reveal if Satoshi is alive. Early cypherpunk Mr. Adam Back, the OG himself, cited Satoshi in the Bitcoin white paper, suggesting quantum computing pressure may reveal whether the blockchain's anonymous creator is still alive. And what's your thinking? Yay or nay to Satoshi being alive? Let me know in that live chat. During the interview at the Q&A session of the Satoshi Spirits event in Turin on April 18th, Back suggested that quantum computing may force Nakamoto to move their Bitcoin. That's because, according to Back, Bitcoin hodlers will be forced to move their assets to a newer quantum-resistant signature-based addresses. Powerful. Back said that the current quantum computers do not pose a credible threat to Bitcoin's cryptography, but will likely threaten it in the future. Back estimated that the quantum computers may evolve to the extent in maybe 20 years, meaning all of your Bitcoin will eventually have to go to a new updated wallet, which can't be hacked by quantum computing over the next 20 years, according to the OG. When the threat becomes real, Back said the Bitcoin community will have to choose between depreciating old vulnerable addresses or letting those funds be stolen, quitting them here. If the quantum computers are here and people at universities and research labs have access, the network has a choice to either let people steal them or to freeze them to depreciate the signature. Adam Back expects the community to go to the former option, forcing Bitcoin's anonymous creator. So ultimately, if Satoshi is still alive, he's going to be forced to move his funds, which will verify Satoshi is alive. And then naturally, if he never moves it, all those coins will get lost and donated to the network. And then it'll prove Satoshi is probably unalived. Still, Back said that whether such a situation will reveal if Satoshi is alive also depends on the Bitcoin future privacy features. Quoting him here, it depends on a bit of the technology. There are some research ideas that could add privacy to the Bitty. So possibly there might be ways to fix quantum issues while keeping privacy. Still, not everyone is convinced that privacy enhancements or not, such as a scenario, would reveal whether Nakamoto was alive. An anonymous early Bitcoin miner and member of the Bitcoin community shared that he does not expect Nakamoto's coins to be moved, as shared here, even if he is alive and holds the private keys. I do not think he'd move them. Based on how he acted so far, I would rather expect to let the community to decide. And he also added that since this is a controversial choice, it makes sense to let the community decide. He said that he'd be surprised if Nakamoto came out of the woodwork to move the assets. And I'm in that camp as well. I don't think he is alive and or he would move it regardless. And I think he would just dedicate it to the network either way. Now, the quantum resistant on Bitcoin, Back explained most quantum resistant signature implementations are either unproven in terms of security or very expensive from a data perspective. He cited Lamport signatures for the old and proven design, but pointed out that they weigh tens of kilobytes, and consequently, he suggested that Bitcoin should be prepared to switch to quantum resistant signatures, but only do so when necessary, which again could be 20 years from now. He suggested a Bitcoin taproot based implementation allowing addresses to switch to quantum resistant signatures when needed. And there you have it, which goes to show you that the Bitcoiners will always be ahead of the quantum computing, because a common thing is like, still, we got to worry quantum computers are going to hack all of our crypto. Well, we'll be on top of things because we're not retarded, are we? Bitty broskies. I want to share with you the latest from the Giga Chad, including 21 Bitcoin truths, which he just published on X. And also this headline reads, Sailor says ETF investors' stronger hands will help stabilize the Bitcoin, referring to like ETFs such as BlackRock, etc. So yeah, let's break this down. Balchunas pointed out that the spot Bitcoin ETFs have attracted 131 million over the past 90 days and are up 2.4 billion since January 1st. He called this impressive, noting it helps explain why Bitcoin has been relatively stable. Its owners are more stable, he says. Balchunas said Bitcoin ETF investors have much stronger hands than most people think. He said this should increase the stability and lower Bitcoin's volatility and correlation in the long term. Saylor's firm, Strategy B, made its latest Bitcoin acquisition April 14th, acquiring 3,459 of the Biddy for $285 million at an average price of $82,600 per coin. And according to the Saylor tracker, Strategy holds now 531,644 BTC. Now, the Bitcoin Volatility Index, which measures Bitcoin's volatility over the past 30 days, is at 1.8% at the current time of publication, according to the BitBo data. And at this time, Bitcoin is trading at around just shy of 85,000. And over the past 30 days, Bitcoin traded between 75 and 88 amid macroeconomic uncertainty, primarily driven by Trump's imposed tariffs and the ongoing questions about the future of the U.S. interest rates. Despite this, Bitcoin remained above its previous all-time high, which is roughly 73,600, first surpassed back in November. Participants in the broader financial market have also expressed surprise at Bitcoin's relative strength in recent times, particularly in comparison to the S&P. And now, again, I wanted to read to you the 21 truths of Bitcoin as per Michael Saylor. He recently shared this. It looks like dated April 17th. This was yesterday at 1:29 p.m. 21 truths of Bitcoin. Number 1, Bitcoin is an ideology. Number 2, Bitcoin is a protocol. Number 3, Bitcoin is an asset. Number 4, Bitcoin is a network. Number 5, Bitcoin is immaculate. Number 6, Bitcoin is ethical. Number 7, Bitcoin is a commodity. Number 8, Bitcoin is a digital commodity. Number 9, Bitcoin is digital scarcity. Number 10, Bitcoin is digital gold. Number 11, Bitcoin is digital money. Number 12, Bitcoin is perfect money. Number 13, Bitcoin is legitimate. Number 14, Bitcoin is corporate. Number 15, Bitcoin is global. Number 16, Bitcoin is immortal. Number 17, Bitcoin is digital energy. Number 18, Bitcoin is a digital energy network. Number 19, Bitcoin is a digital economic system. Number 20, Bitcoin is a digital defense system. And number 21, Bitcoin is an emerging star system. And if you don't know, now you know. As per Mikey Saylor. Now for our featured story of the day. Will the United States literally dump their gold reserves for Bitcoin for their strategic Bitcoin reserve? Well, let's break this down. We've been hinting this for a while, as there's many net neutral ways for the United States to acquire Bitcoin. So is this the dawn of a new reserve era, from gold to treasuries to Bitcoin? Let's break her down. The U.S. has long relied on the U.S. dollar and U.S. treasuries as the twin pillars of its economic, fiscal, and monetary strategies. But what happens when all these instruments lose their luster and become lackluster? According to the Bitcoin Policy Institute, head of policy, Zack Shapiro, the current financial system is entering a historic inflection point. In a recent interview they shared with the Bitcoin Policy Hour, noting that the U.S. announces we are buying 1 million Bitcoin as just a global seismic shock. In fact, we covered that in great detail yesterday, that the Bitcoin price, they believe, the Bitcoin Policy Institute, would soar, literally skyrocket to 1 million per coin just off the announcement of the U.S. purchasing 1 million Bitcoin. They say we'll probably go very quickly to something like $1 million per pretty little bitty going up forever, Laura. And while the changing monetary order, a potential movement from treasuries as the reserve asset towards the bitty, is largely evident for those with eyes to see, the paths that can be taken on that journey are a myriad of gold's role is the largest question mark facing the market. Recent discussions around revaluing the U.S. gold holdings, still officially priced at $42 per ounce, the derivatives, could unleash nearly $1 trillion in new purchasing power should the United States decide to draw upon it. What would the U.S. do with that windfall? Well, the Bitcoin Policy Institute's policy thinkers are right. It might be deployed to acquire a strategic Bitcoin reserve in a budget-neutral manner, precisely, in alignment with the remit of the Strategic Bitcoin Reserve Executive Order recently signed by the Trumpster. Now, gold is ancient, Bitcoin is strategic. And one of my favorite quotes from Max Kaiser, gold is the poor man's Bitcoin, which is right in alignment here. Gold is ancient, Bitcoin strategic. According to Matthew Pines, executive director of BPI, frames the choice in stark geoeconomic terms. In terms of strategic leverage, there is a asymmetric advantage for the United States to having Bitcoin monetized relative to gold. Pines went to note that the U.S. and its population owns 35% of all the Bitcoin in circulation, a ratio that gives Washington serious incentive to prefer digital over metallic money. Gold, despite its historical credibility, is centralizable, expensive to transport, and incompatible with the 21st century economy. And while central banks continue stacking it as a hedge against the weaponization of treasuries, its utility as a modern reserve asset remains constrained. Bitcoin, by contrast, is fast, global, and increasingly liquid, a networked form of monetary energy that sidesteps the geopolitical choke points that define traditional finance. The post-dollar world has already begun. The dollar remains dominant but fragile, according to Shapiro, citing Triffin's dilemma, noting how the U.S. must increasingly choose between domestic economic goals and the international demand of the reserve currency issuance. Sanctions like those imposed on Russia's dollar reserves in 2022 shook the global confidence in the neutrality of the U.S. assets. And since then, foreign central banks have responded by moving rapidly into the gold, and in some cases into the pretty little bitty going up for Valora. The Treasury is becoming less of a neutral reserve asset, according to Shapiro. Reference escalating disorder in the bond markets and the U.S. perceived politicization of the financial power. And I also may add the de-dollarization from the U.S. dollar, such as the BRICS movement being a great example of that. Yet both he and Pine stress that the America still has tools, and Bitcoin may be the most potent amongst them. By shifting revenues into the bitty, the U.S. could reduce reliance on debt issuance. In fact, we can reduce up to 50% or more of the debt, according to Lummis, just by establishing a strategic, Bitcoin reserve, or maybe offloading the gold and trading it for the apex predator here, and securing asymmetric leverage in a digitized world. The act from a position of strength in competition with a geopolitical rival such as China and Russia. And may I remind you, there's only enough room for one country superpower, Bitcoin superpower in the world. So whatever country is going to be the first to stack 1 to 5 million Bitcoin will most likely be the only one to do so and become a literal Bitcoin superpower. Will it be the US? Will it be China? Will it be Russia? What are your thoughts? The strategic Bitcoin reserve, is it a national imperative? Yeah, man. Under the executive order now got in the Trumpster administration, the Bitcoin strategy departments like the Treasury and Commerce are already exploring the budget neutral path. Michael Saylor already laid out a dozen plus viable options for the administration to acquire Bitcoin, and one of them is revaluing their gold holdings. And also we need to do the audit already at Fort Knox to understand if we even have it. And also selling surplus federal assets, which could include real estate, gold, and spectrum rights. Also, what about just printing money out of thin air and trading it for the hardest asset in human history? Or using tariff revenues or royalties. In fact, we can reduce the entire national debt using any of these methods as well. Pines emphasizes the urgency of the institutional execution. She says words matter, especially when they come from the White House. He said, my bad. And an executive order stating Bitcoin is strategic. It itself is a global signal. However, he also heightened the bureaucratic inertia as the real challenge. Obviously, they're still enemies of Bitcoin. There's a massive difference between the speed at which the White House wants to move and the ability of the federal bureaucracy to follow. You know what I mean? Now, from theory to detonation, the global fallout of the U.S. with the Bitcoin pivot. If America were to allow through on large-scale acquisition of the bitty, the effects would be both immediate and far-reaching. Other nation states will see that they can't be left behind, sparking the global hash wars, coined by Max Kaiser. And I think that's just a given. Would that spark Russia and China to try to get the first mover's advantage, becoming the Bitcoin superpower of the world? I think so. Both Shapiro and Pines agree. Whatever your view on the Triffin's dilemma or the monetary policy history, Bitcoin is now too strategic to ignore. Bitcoin is indispensable. Wherever we're going next, it's going to help us get there. So whether the U.S. will truly dump gold is yet to be determined. I think it's likely. What are your thoughts? But to quote the late Charlie Munger, show me the incentives and I'll show you the outcome. The incentives, given the U.S. and China competition, the game theory, and America's relative dominance with regards to the domestic Bitcoin holdings suggests and about face on gold would very well be on the cards. But you let me know. Obviously, we hold the cards, not China. China doesn't hold the cards. We hold the cards. Nippinator holds the cards. So let me know your thoughts, family, and I'll read your comments out loud and welcome everyone to the Q&A segment of the live stream. Trump just gave back the lands to some of the tribes of the NW. Good. That means the indigenous people got some of their lands back? That's a step in the right direction. Please, such B. There is no way any country can amass 5 million big. What if it was a long-term strategy, brother? Like a 10-year play or something. And they're like, so what would that be? 500,000 Bitcoin per year, in my opinion, would be very doable because Michael Saylor purchases an insane amount of Bitcoin. I don't know how he does it, but he gets his hand on sometimes $2 billion worth of Bitcoin in a single week. So if they can do it, why can't America do it? Chickadee China. Chickadee, 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 chickadee. Exactly. How many Bitcoins are there? 14 million, 1.1 held in the original Satoshi wallets. And there has never moved. 3.6 estimated to be permanently lost. 1.5 million yet to be mined. Who's selling 5 million to anyone? Well, I would dare assume there's probably 2 million on the exchanges. Is there a number out there you can verify? So let's just say 2 million are in the open market right now. Swoop. US buys them, they trade their gold reserves for it, and then they have a long-term plan to acquire, just hypothetically speaking, if they were to go the route of purchasing 5 million, which is 25% of the circulating supply. And then over the course of the next few years, they acquire some more, I mean, as fast as they can get it, and who knows? Maybe they're going to seize it from the next batch of criminals, because that's currently how the United States has acquired all their Bitcoin, because they seize it from the other criminals. So we got criminals seizing Bitcoin from other criminals. But we need to change that, and they need to start acquiring it strategically, not just from stealing it.